From the trading floor of the NYMEX, I'm Jill Malandrino for this street. And Jeff, the trade for 2014 was obviously crude. And expectations, of course, for 2015 as well. I mean, it's really going to drive the market.
Oh, without question, we have a very, potentially insane market coming up. This market has traded, let's say, in the last few months in such a precipitous drop here. It almost seems that there's going to be a rally in the early first quarter that people are either not expecting or have already planned on.
Dollar-wise, in 2008, we saw even more drastic drop. But from the highs this June of 107, it almost feels like there was more velocity behind it.
Well, the reason it's happening is it's so dramatic is it happened with everything else pretty much stable.
Right.
And last time that it happened, everything was going into the proverbial crapper at the time. But this is all by itself standing out like a sore thumb here, the way this market has moved in with a good stock market, really, and basically good times to say economically in most cases, except for the oil industry.
So is it just because of the supply glut? There's a stalemate that exists, and it doesn't sound like OPEC or non-OPEC is going to do anything about it anytime soon.
So they're pretty much letting things go as they plan. In fact, they seem to be willing to exacerbate the situation and pump and keep pumping, whereas normally they would draw the line and make a statement. They're letting it go freely. I think we've gotten to the point where they've flushed out all the weak players. That's what it really has come to.
Well, obviously this pricing is hurting the producers, but longer term, cheap oil could be good for the economy and for demand. How does that work?
Well, certainly good for the consumer.
Right.
And what's going to happen is you'll see a trend now. Bigger cars that are burning more fuel. People are going to turn their thermostats up. All those aspects will certainly, let's say, increase demand here because people have that few extra dollars and are feeling good about it. You'll see longer vacations, driving a little more, because before everyone put the brakes on because it was getting just too costly to do these things.
Of course, it's almost 50% off right now compared to last summer. So in terms of levels, what are you looking at for 2015? Do you think there's more to the downside here, or is it just anyone's guess until we get more clarity with producing and pricing?
Well, that is certainly a fair way to look at it. Let's put it this way, I'm a bit of a contrarian, and I think it is so overdone on the downside here. It's frightening in respect. This market has not had any sort of a real retracement, and markets trade that way. This has been a one-way with no retracement market now for the last $15 to $20, and that to me is not a good, healthy situation. I'd be much happier if there were a few $5 rallies mixed in here to sort of at least give the market a chance to digest those numbers. So really, we are at a point where I'm looking at even any news that I see as if it's neutral, it's got to be bullish to me.
Okay, thanks very much, Jeff. Happy New Year. From the trading floor of the NYMEX, I'm Jill Malandrino for The Street.